Hey guys, Justin here. So this video is going to be a little shorter than my normal videos, but that's okay because I want to focus on a very specific topic in this video, which is Shopify's upcoming earnings report. Now, unfortunately, I am a little late with releasing this video as Shopify is planning on releasing their earnings for Q4 of 2020 before the market opens tomorrow. But if Shopify does beat analyst estimates like I am expecting, then don't be afraid to buy Shopify stock, even if it does jump up big tomorrow after the earnings report. And the reason I say this is because there are a lot of positive things happening behind the scenes with Shopify stock, which has massive implications for Shopify stock price, which we will talk about in this video. And I am so bullish on these developments that I actually bought an additional $25,000 worth of Shopify stock just a couple of days ago at a share price of $1,468 a share. So with that being said, if you are new here, please consider hitting that subscribe button and checking out my channel. I post videos about the stock market and investing every single week, and I don't want you to miss out. Also, we are getting close to 10,000 subscribers on this channel, which is just crazy. So if you are new here and you want to help me reach that 10,000 subscriber goal, go ahead and hit that subscribe button. Now, a lot of people like to think about Shopify as simply a software company that makes money by hosting websites for small businesses. And people also like to compare Shopify to other website building companies such as Wix, Squarespace, and BigCommerce. But if you're a subscriber to my channel, you would know that Shopify is much more than just a simple website building and hosting company. In fact, when you really dive into the many different products and services Shopify is offering right now, you can see that Shopify is much more similar to Amazon than these other companies like Wix and Squarespace. Now, before we get too deep into Shopify's products and services, let's first talk about Shopify's financials. Many of the different growth stocks I talk about on my channel don't have very impressive financials, and that in the past has included Shopify stock. A lot of the growth companies I invest in either aren't yet profitable, or if they are profitable, tend to have very high price to earnings ratios, which for value investors and traditional Wall Street analysts can be a huge stumbling block. But at the end of the day, good leadership and great products usually always win out. And when it comes to Shopify stock, I think they have both of those things working in their favor. Now, with that being said, let's get into the reasons why I am really excited about Shopify's earnings report tomorrow. First off, Shopify's revenue growth is continuing to accelerate this year, and Shopify is also gaining market share faster than any of their rivals, including Adobe, Salesforce, and BigCommerce. In fact, if we take a look at Shopify's revenue growth year over year, we can see that Shopify jumped from 47% growth in Q1 of 2020 all the way up to 97% and 96% growth in Q2 and Q3, which means that they were able to double their revenue growth year over year in a single quarter, which is very impressive. Now, a lot of this revenue growth can be attributed to the coronavirus pandemic, but it is still impressive growth nonetheless. And what's even more impressive is that Shopify's year-over-year revenue growth from 2019 to 2020 is almost identical to Amazon's revenue growth. If we look at this table comparing Amazon's revenue growth to Shopify's revenue growth, we can see that Amazon's revenue grew by 175% from 2019 to 2020, which is the exact same percentage that Shopify's revenue grew. However, the kicker here is that Shopify's revenue is growing at a much faster rate than Amazon's, and it has been doing so since 2016. Also, on top of the impressive revenue growth, Shopify is now profitable, and for the first time in the company's history, they have posted a net profit on a trailing 12-month basis. Shopify announced net profit of $36 million in Q2 of 2020 and $191 million of net profit in Q3. Combined, that gives Shopify a $197 million net profit over the past 12 months. Now, what is significant about this is that other high-growth companies such as Tesla saw their own stock prices skyrocket after becoming profitable on a trailing 12-month basis. In fact, if we look at this chart of Tesla's net income, we can see that Tesla first became profitable on an annual basis in Q2 and Q3 of 2020, which if you look at Tesla's stock chart correlates pretty closely with the beginning of Tesla's huge stock run-up. So it's safe to say that Tesla's turnaround into a profitable company was the main catalyst for their huge rally. And I believe the same thing could happen to Shopify stock very soon. In fact, if we look at Shopify's stock chart, we can see that despite trading flat since July of last year, Shopify stock is starting to break out. Shares of Shopify stock have advanced by 34% over the past 2 weeks alone and have reached new all-time highs. Now, this breakout does not mean that Shopify is guaranteed to skyrocket soon, and it is entirely possible that Shopify stock could reverse from these all-time highs. But if Shopify can exceed analyst predictions for earnings in a meaningful way, then Shopify stock could run up significantly from here. Now, the other reason I am so bullish on Shopify stock moving forward is because of the massive opportunity that e-commerce creates for the company. In order for Amazon to grow bigger, Amazon needs to sell increasingly more items through their e-commerce website. However, Shopify makes money by enabling other businesses to sell more things online. And Shopify is starting to expand from serving only small and medium-sized businesses to also serving large multinational corporations. Over 7,000 large companies have already signed up for Shopify's Shopify Plus platform, including well-known companies such as Heineken, Nestle, Staples, and General Mills, which at a cost of $2,000 a month represents millions of dollars worth of revenue. And what Shopify is really trying to do here is become the Amazon of individual brands, which is essentially another way of saying that Shopify wants to provide the exact same level of functionality and customer service that Amazon provides, but they want to do it in a way that lets brands shine through. Now, right now, companies that want to sell online are stuck in a really bad situation. They can either go with Amazon and put up with counterfeit product listings and direct competition, or they can try to build out an e-commerce site from scratch. Now, the biggest problem of trying to do it yourself is that the cost is often much higher. In order to have a good e-commerce store, you need three big things. The first is obviously the website, which website builders such as Wix and BigCommerce can provide, but then you also need a payment processor and a fulfillment network, which are things that can get very expensive and complicated as your business grows. Now, if you are selling handmade widgets from your house, then this is not really a big deal, since your warehouse could literally be a storage room in your basement. But for medium and large businesses that really want to grow, they are left with no other choice than to invest millions of dollars in upfront costs to keep their businesses growing. And Shopify understands this. In fact, on their website, they have a quote from a business owner who said that while working with other e-commerce platforms, he was asked to shell out upwards of 100 grand just to get a custom checkout on his website. So these are very real problems that brands are facing today as they try to start an online business and scale it up. And Shopify is working hard to address both of these problems for their customers. Now, Shopify is constantly upgrading its platform to make it more functional for its merchants, and every merchant can benefit from these upgrades for a very small monthly fee. Also, Shopify recently announced they would be integrating their popular Shop Pay app with Facebook and Instagram, which will allow sellers to use Shop Pay on their Facebook and Instagram checkout pages. Based on this, analysts have now started to change their thesis on Shopify from a software company to a payments company similar to Square and PayPal. And this does make a lot of sense. Also, Shopify continues to build out its own network of fulfillment centers that will one day be able to offer the same level of service that customers have come to expect from Amazon. And this includes 2-day shipping and even custom packaging for individual brands. Also, one more thing I should mention on the payments topic is that Shopify was an early investor in a company called Affirm, and they reserved the right to buy over 20 million shares of Affirm stock for only 1 penny each, which, based on the price of Affirm's recent IPO, gives Shopify a $2 billion profit. But that's not all. Shopify also partnered with Affirm to power Shopify's new Buy Now, Pay Later financing service called Shop Pay Installments. And Shopify will allow its over 1 million businesses to enable this Buy Now, Pay Later feature by simply flipping a switch. Now, this is significant because Affirm is essentially a credit card replacement company. So instead of putting a large purchase on your credit card, Affirm makes it easy to roll that large payment into a convenient monthly payment plan. Now, of course, you still have to pay interest if you're using Affirm, but this feature could begin to take revenue away from credit card companies if enough people decide to use it instead of a credit card. So as you can see, Shopify is really focusing heavily on the fintech sector right now and could begin taking market share away from other payment companies such as PayPal, Visa, and MasterCard sometime soon in the future. So with all that being said, we will have to wait and see what Shopify's earnings bring tomorrow. But I decided to go ahead and take my chances by buying a large chunk of Shopify stock before it happened. That way, if Shopify's earnings report is stellar and their stock goes up, I will get the benefit. And if their stock happens to fall for one reason or another, I will simply buy more on the dip. So we'll have to see how that strategy plays out. If you enjoyed the video, make sure to hit the like button and check out my channel for other great videos. And with that, thanks so much for watching, and I'll see you in the next one.